All right, everybody. Thanks for the patience on having the next call for the community. I had a really nice trip to New York City with my wife. We had a great time. And then we also went to Connecticut. And Connecticut was really, really interesting. And arguably now the best place to eat pizza in the United States in New Haven, Connecticut. They have a community of Italian people that settled there a long time ago. And they do have delicious pizza there, by the way. Just make a note of that if you like pizza. But New York City is New York City. I've been there 3-4 times for fun. And I always have such an amazing time there because the city never sleeps and we had a great time. So, but now we're back. And while I was traveling, you know, I could easily just keep up with the market, and the market just keeps doing what it's expected to do under a new presidential administration that has the House and the Senate on his side. I think the market's going to do really, really well. And if we look at so if we look at, you know, the NASDAQ, it's doing really well, but some stocks are really beginning to work, like Zoom Video. It had been like just not working for a long time, but it's really begun to work along with other small caps. Small caps is really interesting right now. The Russell, if you look at the Russell for the last, let's call it 6 months, it's up 16%, but you see this rise, especially after the election, it just has really taken off. It's up almost 10%. And I think the small caps are going to do really, really well. One of the reasons is interest rates are dropping. Another reason is just I think the sentiment around economic growth is going to be much more positive, less regulation. Just those things are going to help these small companies and acquisitions and mergers and IPOs. That part of the market has been really slow. I mean, can you think of the last real big IPO? It's kind of hard to think, well, which one was the last one? Where like 4 years ago, we were getting these really, you know, high press, really exciting IPOs. In 24 and in 23, not so much. Acquisitions, not a lot of acquisitions. A good part of it was the Department of Justice is just been really anti-big business, hey, if you start really succeeding this is kind of more of an opinion than anything, but like the Google example is Google's been great. They got to their position by being innovative, having the best ideas, and they've grown to be a very large company that has a lot of power. But the Department of Justice makes it seem like they're bad guys, bad people, and I just don't feel that way. Well, I think as it relates to small caps, as you have a different point of view on that, and it's really, hey, let's let the best companies, you know, do what they're going to do, which is be leaders in their space, dominate in some cases, let them run, let them be successful so they can create more jobs and do their, you know, execute their business plans. And that could include acquiring these small cap companies. So I'm expecting that the next 4 years, small caps are going to do far better because there'll be acquisitions here or there. I remember Activision. I was a stockholder in Activision. Microsoft acquired them. Overnight, I had a bump of like 60%. Now that was great to be a stockholder. And then overnight, voila, you just made 62% overnight. That is great. That's fun. And obviously that really impacts the rate of return on my investment. So I'm really optimistic about small caps. I got back into it yesterday. I released a video on a small cap company. And I think I'm going to continue to look at small caps because it is a place where in an expensive market, I believe that might be the place to find a good diamond in the rough, something that's going to work. Other places are a little expensive. If you look at Apple, I think it's probably trading sideways to this point. Microsoft, close to the same. Even Google hasn't really done all that great. Those are the massive caps. So it's interesting to see the market play out. Overall, I think stocks are going to be a good place to be. The other place that's been really good to be is in crypto. Bitcoin was very close to 100,000. It got to $99,850 per coin. And holy smokes, it really was about to touch 100,000. And that is causing Coinbase, the miners, Ethereum is up, the other big cryptocurrency coin. And that really is a product of, again, you have a different administration, an administration that the current, which soon to be previous administration, was really anti-crypto. Really, hey, we got to protect, I guess, the public in a way. I get that, but government, we're not China. The government should not be deciding what's a good idea or a bad idea. I think the marketplace should decide what a good idea and a bad idea is. And I think crypto conceptually, and this is my own personal point of view, not saying anybody else needs to follow this, is that it makes perfect sense to me. We're in a digital world that's fully connected. To have digital assets make complete sense. Not having them would not make any sense. So having a store of value like Bitcoin make a lot of sense to me. So I invested small amounts over time, and it's been a windfall for me. So it's been really good. With the new administration, as opposed to having a headwind in the currently led administration that's overly protective, I guess, on Bitcoin, Ethereum, ETFs, you're going to have the flip of that, which is an administration that's like, hey, let's grow this. The new administration wants the U.S. to be the center of the cryptocurrency industry, which is a good idea. And I think it's going to cause Bitcoin to go up. My guess, I mean, we're nearing 100,000 by the end of 24. By the end of, let's call it 4 years, which would be the end of 2028, I would not be surprised if Bitcoin hit 500,000. That would be a huge leap forward. But if you consider over the past year, it's up 154%. 500% from here would be, it would double 2.5 times. Okay. So that's very realistic based on the rate of return. Over the last 5 years, it's up 1,167%. Now, the past doesn't tell us what the future is going to be. It's just an example that the coin over the last 4 years, the last administration went into office, I'm going to say around January 9th. From that point, over close to 4 years, it's up 138%. So it's very realistic that could happen. Ethereum would follow, as well as the companies that are in that industry. So Scott, you have a question. Go for it.
Hey, thanks. Yeah, just a note on the Bitcoin value. So if Bitcoin does go up as much as you say, you think it just might, well, a big part of that would probably be inflation of the dollar, right? So I would just, if Bitcoin were to rise that much, I would just hate to see what the dollar is worth at that point. And so, I mean, that's actually one of the reasons people invest in crypto in general, right? It's kind of a hedge against inflation. So anyway, that's my thought.
Yeah, thank you for the comment. I agree that, when you think about, why I invested in Bitcoin and why people invest in gold are very similar. Now, one of my mentors, this is like 30 years ago, maybe a little longer, like 32 years ago. One of my mentors, entrepreneur, really successful guy, and he invested in gold. And he would explain to me that gold was a way to stay ahead of inflation. It's like, it's a hedge on the rest of the market, other asset classes, and he would put some money into gold. And I would think through it, and it just, for me personally, it never made sense, right? I had a very modest upbringing. I never wore jewelry. I never understood why people like jewelry. I don't know if I'm strange, but it just never made a whole lot of sense to me. It's like, and the other things that don't make sense to me are very expensive purses and very expensive things that don't have a lot of utility. It's like, for me, like a timepiece, right? A watch. I don't even wear a watch because my phone has the time on it, but I know some people really appreciate and love having a $50,000 or $100,000 timepiece. I don't get that. Now, when Bitcoin came out, I have worked in technology for 30 years. It really made sense to me. I'm like, it's a store of value. You stay ahead of inflation. So very similar to how gold investors treat gold, I felt that way about Bitcoin. So I put small amounts, and it certainly has stayed ahead of inflation. It's been extremely volatile. You can see this graph, right? That, from 2018 to this point, I felt like, wow, this is incredible. We've got up to 61,000. When I first started Bitcoin, I think each coin was like $1,500. So it's like, oh my gosh, I should have bought more. And then it collapsed and I'm like, oh boy, is it ever going to come back? And then from that point up, it's really done well. So it's my way of this is my digital gold. It's another way of thinking about it. But along with it being a store of value, I really do believe it's kind of an investment in the future. Now, I can't tell you what the world's going to look like in 10 years, and I have absolutely no idea what it's going to look like in 20 years. But again, the concept of a digital currency and digital assets completely makes sense in the world we live in, which is very digital, very connected. I mean, I don't need to convince everybody. We're on a web conference call over the internet. We have people from four different countries tuning in. Isn't that incredible? And it's a very affordable way of communicating with people. So crypto's really working. So that's it's really, I think since the election, the market has really taken off. And I think we're going to have more periods like the one we just experienced. I'm sure we're going to have pullbacks. I mean, the market's not going to go straight up, but I think that the market is going to do quite well for the next 4 years. I certainly hope so, because obviously I have money invested in stocks and real estate and other assets, and that'll bode well for my family's fund. So anyway, so those are my opening remarks. I'd love to hear what you think of the market and what you've observed here in the month of November. We still have 4 trading days in the US, but maybe kick it around. Anybody have any other comments on what you're seeing in the market? And go for it.
So it looks like those times where everyone thinks that everything is going up forever.
Yep.
So maybe let's buy stocks with caution. I don't know what to think. It's the first big bull market that I have seen. So I don't understand what to do really.
Mm-hmm. Now, you know what conversation, it'll never happen, but I would love to have this conversation with Warren Buffett. Mr. Buffett, 6 months ago, you started going into cash and you started really accelerating how much you were putting into cash, selling out of stocks, selling out of Apple and so forth. What was your feeling before the election? How did the election enter your decision-making? And now that the election has happened, how has your decision-making changed? If Warren Buffett gave me an answer to that, I'd be really, I would listen to every word and I'd probably record it and listen to it 100 times. But it's interesting to see that, one of the best investors in history was really moving away from equities, going into cash, and then the market's taken off. Back to, you, Tomas, you're a younger investor. This is like, either call it a tailwind. If we were sailing around the world and you had a 40 or a 60 knot tailwind, you're just going to sail much faster. You're going to get to your goals much faster. And as we talked about before, as a young investor, I would always consider growth stocks, because when growth stocks start growing, that's where you see stocks like, let's say, a Robinhood, which is a riskier stock, but it really just takes off. So I'd rather I put $5,000 into Robinhood and just saw it take off. Over 20 years, that $5,000 is now worth $100,000. And that happens with growth stocks. The slower growers, safer stocks, they'll get you a return. But for younger investors and even older investors that want to really bring up their return, having good growth stocks, quality growth stocks that you really understand and believe in, that's where the money is at. So next 4 years in the US, I just think that a lot of things are going to help stock values, stock prices, the lower interest rates, the government being in a position to really try to make the economy grow faster. What's also interesting, right, is the idea, you guys heard that Elon Musk and others are going to lead the DOGE, Department of Government Efficiency. And what they're attempting to do is something that Ronald Reagan did 40 years ago. Yeah, 45 years ago or so. And he really got rid of a lot of government spending. He just thought the government's too big. It's spending too much money. And that's what they're going to try to do, is get rid of unneeded spending, or maybe questionable spending. Like, hey, you're spending a lot of money in that area. Get rid of it. Have private industry, have companies like Robinhood or Chegg or, whoever else take over that, because private sector will always be more efficient than the government. They have the incentive of profit. They have competition. If they don't do it well, a competitor will come in and replace them. And government tends to not be as efficient as private sector. So that's going to be an interesting idea that's going to help the economy as well as stocks. So, all right. Any other observations on the market, conditions, sentiment, before we jump into the list of stocks you guys wanted to talk about?
I just have one more comment, and this is my amateur take on this. But if Warren Buffett is holding cash, like a lot of cash since 6 months ago, so if he's not waiting for a crash, what is he doing? I don't understand it. I mean,
I don't know. It's just one of those things where we don't know when the market's going to correct. It could correct, next week. It could correct middle of 25. It could correct in 26. It's going to correct. It's going to come down, substantially. But it's interesting to see what Warren Buffett's done and how things are playing out, because Warren Buffett kind of signaled that, hey, he probably felt that either the stocks he was owning are a little too expensive. So his term is, be fearful when everyone's greedy, be greedy when everyone is fearful. So he was probably feeling like everybody's greedy and he's getting out. Well, now with the sentiment really getting positive, I don't know what to think. But I do believe, my own personal point of view is, stocks are going to do well for the next 4 years. All right, and Kiter.
And let's not forget that the stocks that he's selling are stocks that he made a lot of money on, few times over. First. Second, on his cash, he's getting like 5% interest, as it's not just money that is sitting there, it's in treasuries. And let's also remember that's a lot of money, but he have another, his company worth 1 trillion, so he have another 700 million that are still working and still making money. So
I agree.
I believe that, yes, he's waiting for an opportunity. I hope there will not be a crash, but maybe a little correction, but he's waiting for his opportunity.
Yeah. And there will be...
and another thing, I also heard someone that is saying that, listen, he's 19.7. He doesn't have too many years still with us. So he wants to keep his legacy. He don't want to ruin it by, risking his legacy. So this is also a way for him, like, to stay, I'm not going to beat and I'm not going to run the next NVIDIA, but I'm not going to screw my legacy. Something like that.
Yeah. I agree.
If I could jump in, just, and Kiter already gave part of my point away, but which is fine. But so a little bit about me. I'm not a financial advisor or certified securities trader, but I've started studying financial markets, and so I've started studying the things you would do to be like a portfolio manager. Now that means, for example, risk. That's like one of the top topics, if not the top topic, when you're learning to become a portfolio manager that you learn about, right? And there's like, for example, the Sharpe ratio. If you don't know what the Sharpe ratio is, I would recommend everyone look into it. Just basically the risk you're taking for your return. And so I watched a video recently, and the way to think about Berkshire Hathaway, or Buffett's position right now, is not so much that he's expecting a crash. The way to think about it is, if you look at the market and the risk-adjusted returns as a whole, perhaps he and his team are seeing a better risk-adjusted return, again, with the Sharpe ratio and all in mind, in cash and treasuries than in equities, at least with more of a balanced adjust more towards bonds and treasuries, right? And than equities. Does that make sense?
It does.
So that's it.
Yeah. And yeah, I agree that, Warren Buffett's he's in the Premier League of stock investing, and those guys do look at risk, and they have mathematicians on their staff. So yeah, I agree with everything you said. And his decisions are very influential, obviously. And I like to form my own, I like to think for myself and look at the market and say, okay, well, I might be wrong, but I think this is what's going to happen. And if anything, I'm going to learn something. Then we get better over time. And again, I'll just express what I think is going to happen over the next 4 years. I think 4 years from now, we're going to see, like the S&P is going to be substantially higher. The NASDAQ is going to be substantially higher. Between now and then, could we have like a 20% correction? Yes. Do I expect it's going to happen? Yes, absolutely. And when that happens, it'll be a good time to buy, because corrections often, bring down the prices of certain stocks quite more aggressively, or it's exaggerated. The correction is exaggerated in certain industries, and it creates buying opportunities. So we'll see how things play out, but that's where we're at today. It's November 24th. And the other thing, for the remainder of 2024, we tend to have a Santa Claus rally, which is stocks tend to rally through the end of the year. And then beginning of the year, we'll see what happens. There might be a little bit of a correction at the beginning of 2025, but it's just a complete guess from me. All right, so let's jump into. Go ahead, Nkiter.
Yeah, just one more comment. I know that he said that there was once that Berkshire gave a dividend. It's happened only once, and he was kind of joking about that, but it happened. So maybe, he can give like 10% one-time dividend. I will be happy to get it.
Yeah.
It will be a nice present, end of year present. But I don't know if that's what will happen.
Yeah, we'll see. I remember Microsoft a long time ago. They had so much cash that they gave like a huge dividend. I forgot how much, but the stock was trading for like $25 a share, and the dividend was like $10.
Wow.
That was like 15, 20 years ago. All right, so let me get back to the list of stocks. And Nkiter, this is the stock we want to look at, right? AOS.
Yeah.
All right, perfect. All right, so AOS. All right, small caps. I love small caps. Right now, I'm looking for small caps. So A.O. Smith Corporation manufactures, markets residential and commercial gas and electric water heaters, boilers, heat pumps, tanks, water treatment products in North America, China, Europe, and India. Very good. So these are, they wear out. You have to replace them. I replaced my air conditioning unit a couple months ago, and I replaced my water heater 10 years ago. It's probably gonna break soon. I'll have to replace it. So those things tend to have to be replaced. And of course, new home construction tends to drive more demand in this area, because when you have a new home, obviously you can have water heater, water treatment, and so forth. So that's what the company does. It's an industrial, and they do specialty industrial machinery. Okay, that makes sense. Now let's take a look at the stock price has been down 3%, up. That's a very good return, 51%, and you get a dividend. So with the dividend added on, you're nearing 60% rate of return on an industrial. Okay. So for the past year, it's flat. Okay. Maybe an opportunity, especially since it's come down substantially. The last time they made an announcement was October 22nd. And right around the time, October 22nd. So it was already coming down. Interesting. Huh. So residential real estate is, we're not building enough of it. And I would say that the real estate market's going to drive some demand for these products. And with the president, president-elect Trump, he's a real estate guy. So I think he's going to do a lot of things that are going to help home construction, multi-family housing, big apartment buildings, and so forth, where a lot of water heaters will be consumed. So I think the industry should do okay going forward, is a high general statement. Now, they were really booming coming out of COVID, and I think a lot of people were upgrading their homes, making them nicer. There's COVID money going around. People were working at home. So yeah, there was an increase of demand. Now the trailing 12 months is growing at 2.45%. The latest quarter contracted a bit, 3%, 3.7%. The compare was September of 23, which was a pretty good number, meaning they had grown well going into that number. So, okay, having a little pullback, it doesn't scare me. I actually think it's a pretty good opportunity to buy something potentially that is a little ahead of the rest of the market. All right, so income statement looks okay. Let's take a look at their gross profits, $337 million on a $900 million revenue number for the quarter. And if we look at the gross margin is 37%. Not bad. It's an industrial. These guys make things. They have to put in material costs, labor costs, that kind of thing, engineering cost. All right, so that looks okay. So it's a small cap at $10 billion. PE is reasonable at 19. Forward PE is even better. Dividend is 1.85%. Analysts think it's 18% discounted and it's a buy. So when we look at their financials, going back to the annual, you see that 2019, they were about a $3 billion company. Now they're about $3.9 billion. Very good. They've grown their company over time. That's a sign to me that it's a quality growing business. Okay. So let's take a look at their balance sheet. Make sure they don't have too much debt. Cash is 255. That looks okay. Total debt is 143. Man, very good. Good job. They have more cash than debt. Very solid balance sheet. Now we look at cash flow. Free cash flow, 483. That looks like a good number. So 483 in cash flow. It's come down a bit in the trailing 12 months. It was at 600 in 2023. They've had a contraction in their business, but I expect that they're going to start growing at some point. So having said that, I mean, this stock is fairly priced at the current time. We look at like a 500 million free cash flow number and then multiply it times like 20, which would be reasonable. This is going to be a modest grower, like grow 2 to 5 to 6%. Quality business, no debt. Multiply 500 million times 20, you get to 10 billion. And the company is being valued at 10.65 billion. So it doesn't give us a huge opportunity like, oh man, this thing is really sold off. It's a great opportunity. And for me, I would have to pass on this one here. Industrials are getting more and more interesting. But right now with the market, stock prices being so high, I'm being careful not to buy something that's okay, moderately good. I want to make sure it's really good or they have a really exciting future. Like, hey, they've got something that's really going to grow. The companies or businesses and individuals are not going to be able to live without. So something like that comes up, okay, I'm a buyer. But other than that, this one here does not look exciting to me. And Kiter, what do you think?
No, I was hearing you, and I have nothing better to say. I kind of accept what you are saying. Evidently, I mean, their business looks as simple. I remember that when I was in the US, I was seeing their heaters in Home Depot and Lowe's and so on. On the other hand, as you read in the beginning, they are in China and in India, and they have input cost of materials, right? Copper and steel and all this stuff. So it's a bit complex, I would say. It's more complex than it's seen on the surface, maybe. But yeah, in that case, yeah, that's what I wanted you to look at. That I understand your multiple on the free cash flow. Yeah, I mean, you're taking the last 12 months. If you're taking one number before that, and multiple by 20, it comes to be 12 billion. But
Yeah,
I agree with you. We need better margin of safety. And maybe if you go to, let's say, $60 per share, it can be more safe to look at it.
Yeah, if we had like a 30-40% margin of safety here, let's say that the market cap was at 8 billion. Okay, hey, let's talk about this. I'm interested because I'm not expecting this to be like a 5-bagger over the next 5 years. No, this one's probably going to be a nice 5 years later. It's worth 60% more, maybe 80% more. But we have to buy at the right time because If we buy at the wrong time, if we look at the last 5 years, you buy here and you're like, oh no, I'm not making very much of a return. If you buy here, you're like, okay, that's when I want to buy, is when it really pulls back. It's pulled back recently. We just needed to pull back maybe another 20, 30, 40%.
Yeah, maybe. One of the things that I looked at, and that's why I also asked about, is they're doing nice buyback and also increasing their dividends. So these are also maybe two positives that are stand for them. But again, together with maybe a little better price, it will be more interesting.
Yep. All right. So let's switch over to General Mills. General Mills, I think most people know what General Mills does. They're a food company, and boy, they do cereals. They do all kinds of food. And obviously, food is a very stable industry. It's a consumer staple. And these guys, they pay a nice dividend at 3.69%. Look at the 5-year. It's up 24%. It really had a pullback. Look at this pullback. This was in 23. Wow. That is interesting. And it's being traded just from a graph perspective. It looks interesting because it's like, this is a very well-known name. I mean, this is, these guys have been around for 100 years. No, I'm sorry. 1866. So what is that? 160 years or so? 158 years. So they've been around for a while. So they make all kinds of different food products. I'm sure that if I go in my kitchen, I'm going to find a bunch of them. So they're a $36 billion market cap company. Okay. And the revenue is 19 billion. So you're paying about 2 times revenue for the company. The dividend looks nice for a investor that wants income. The analysts think it's a hold, but it's discounted a bit. So this is a slow growing company, stable. Now we've had food inflation in 21, 22. And that's what I think caused this growth rate, because food inflation. But these guys kind of get squeezed a little bit, right? Their input cost goes up. Hey, we have to pay more for wheat and oats and all kinds of ingredients that we put into our food products. And I think it's been a little tough to raise the prices on the store shelf, because if they raise prices, sometimes they lose customers. So it's kind of a very important change that they have to make. But you see that even though we've seen inflation really get controlled, their revenue hasn't gone down a whole lot. This is a stable company. So it's about a $20 billion business. Looking at their gross margins, 34.6%, 35%. That's a very good gross margin number on a very stable business. Let's take a look at statistics. I want to look at their total debt compared to their EBITDA. Their EBITDA is 4.2 billion, and their total debt is 13.2 billion. So it's about 3. So it's acceptable. It has a passing grade. The balance sheet's okay. They have a little bit of debt. With interest rates going down, that's going to help General Mills. They should be okay. Now, when we look at cash flow, 2.7 billion. Man, that's a good number. 2.7 billion. Multiply that times 10, we're at 27 billion. And they're right above that. So this is a stable stock. Now, I just talked about how, Trump's really going to have the economy growing and really going to try to push the stock market up. This isn't my first idea on a stock that I would want to own going forward, but I can't argue with an investor buying into General Mills. You're getting it at a discounted price. You're getting a very good dividend. I think you could substantiate this number. I mean, you're really buying this at about 14 times free cash flow. That's pretty good. It's a quality name. I think you can wake up in 5 years and you've made 40 to 60% appreciation, and you've collected this dividend. So this one here, it's not the investment I'm looking for, but if you have an investor that wants lower risk, wants some income, wants to buy a good name at a good price, this is a pretty good idea. Analysts, let's see what they say. They say it's a hold. 14 of them cover the stock. And if you look at what they're saying, it's discounted by 11%. They're basing it mostly on earnings per share. We look at the forecast of revenue, see how stable it is. It's like pretty much going to be the same for the next couple of years. Their profitability is going to be a little bit better. Okay. So inflation is being controlled. And the other thing too is we're entering the picture of tariffs, right? Like now, if you're in an industry where everything gets imported from China, I think those industries are a little nervous right now because they're like, oh boy, President Trump's going to be putting a lot of tariffs out there, and that might create a lot of friction and problems for those industries. General Mills, they don't. I don't think they have anything to worry about. Like the food gets grown here, gets produced here, gets sold here. Tariffs don't touch us. So this might be the tariff trade. Low risk. Tariffs aren't going to touch it. So I can't argue with an investor being interested in this one. So what do you think, Kiter?
Okay, yeah, thank you. Yeah, I'm following that. I'm looking for income. I'm more income oriented at this point, so that's why this one interested me. One of the let's say concerns that are hovering there in the air, is Trump's new health minister, you call it, like this
Right.
Kennedy Jr. He says that he wants to apply some regulations. And I read somewhere an example I don't know about General Mills, but Pepsi, for example, they have snacks that are sold in Europe and snacks that are the same snacks that are sold in the US. Those in Europe doesn't have ingredients that are in the US. And in Europe, we know, I know, maybe you can say how it is because you have the Switzerland view, what's the name, Scott? Is that the rules in Europe are more strict than in the US. So and the food is, I would say that overall the food is of higher quality, and so that may be a little burden on companies at the beginning if they will need to replace the ingredients to the standard of Europe, which overall it's a good thing for the health of the population, but it may create some price pressure, if you know what I mean.
Mm-hmm.
Well, Switzerland's not the EU, but yes, I know what you mean. And it's the EU regulations, I think, that you're referring to. And yeah, my understanding is there are, I don't know how many ingredients, but there are certainly some major ingredients and additives that are not allowed generally in Europe that are allowed in the US, because at least the EU has said that they're possibly carcinogenic. Now, maybe in much larger doses, right, than you would find. But yeah, that does add some difficulty. And I think here as well, there's the laws, generally speaking, they try to confirm with the EU. But yeah, generally speaking in Europe, I would say they are pickier about additives. So.
And Kiter, just to express my observation is I don't think you have to worry too much about that. And because there's two things that are going to go on. First, I think the new administration is going to try to reduce regulation. So the Food and Drug Administration in the US, they're probably going to say, hey guys, get rid of a bunch of these rules. A lot of these rules are kind of hard to follow and they don't have a whole lot of value. So get rid of them. And FYI, we don't want you to use a couple of these ingredients. So the net would be General Mills is like, okay, great. We reduced our costs because the FDA is now more pro-business. And yeah, we had to take away a few ingredients, maybe replace them. But the net might be even positive to a food company with this new administration. So it's too early to tell, but I would say kind of let things play out. You're messing with the food supply. General Mills provides food to, I would say, middle America and lower income America. You can't play with that food supply too much. You can't say, oh yeah, cereal is going to double in price. You would get a lot of mad people. You'd be like, what the heck? If you raised cereal prices by 10%, they'd still be angry. So you have to be, realistic. I don't think they're going to change a whole lot. They're not going to make the task of General Mills making food more difficult. I think they're going to try to make it easier. That's just my opinion. We'll have to see how it plays out.
Well, if I can jump in, sorry, I think Kiter is more concerned with their business abroad than the U.S. Right, international expansion. But and then I will actually say something else, kind of the devil's advocate on this, that even if the EU does get stricter and Europe gets stricter in general, I don't think that would be much of a problem for General Mills or any food corporation like international food company, because you know what they do? They adapt. And in fact, there was, for example, the pasta brand Barilla? You see it in every store, right? U.S. and Italy. It is,
familiar with it?
And it's the #1 brand in Italy. That's real. But there was kind of a scandal that they put more sugar, or maybe they didn't put sugar at all in the sauces in Italy, but they add it in the U.S. And they said it was local taste, whatever. But the point is that the company is just they're going to make money no matter what, and if they have to adapt a little bit, they're going to do it.
Yeah.
Right. That's the modus operandi of a corporation.
Yeah. Agreed. All right. Perfect. So that was General Mills. Now let's move over to Tomas. Is this the stock you want to look at?
Yes, BIOX.
All right. Cool. All right. So enough of those small caps. Let's go micro cap. $385 million. Woo-hoo. Small cap. And all right. So BIOX Corporation Solutions, together with its subsidiaries, provides crop productivity solutions. It operates through seed and integrated products, crop protection, crop nutrition segments. The seed and integrated products segment provides seed traits, germ plasmids, seed treatment packs for healthier, higher yielding crops. The crop protection segment develops, produces, markets Rhizoderma, adjuvants, therapies. Okay, so these guys remind me of Monsanto, which is an American company that does something similar. And these guys here, I think you mentioned where are they located? Argentina, cool. I like companies like this that have a lot of science to them, right? Because sometimes they create, a solution that's really, really beneficial to mankind, and they get to, profit from it, which is the right thing. That way they get rewarded for investing all their research and development. Okay, so these guys, now, have you looked at this company, Tomas, so I can ask you a few questions?
And yes, I have read a little bit. Not for many days, but yesterday and today I have been investigating about BIOX.
Where are their primary markets? Where is their product sold? Which country?
Argentina.
But do they sell to like Brazil? Do they sell in Africa, United States? Do they sell in China? Do they sell to other countries?
Yeah, they sell primarily in Argentina, also in Brazil since 2019, and the business is growing in Brazil, and they are trying to enter big time in the USA market. The problem is regulation, the patents, and so on. So it takes time, and they are trying to expand to Bolivia and Uruguay.
Great. So Monsanto is successful here in the United States, and I think it's a really interesting company. Okay. I sometimes when I see a small company, I like to see an example of a big company, and it's kind of say, okay, this is what the possibility. Can BIOX turn into Monsanto? And then it, instead of being 385 million in market cap, it becomes a $38 billion market cap. So let's take a look at it, and then at the end, we'll compare it to Monsanto. All right, so I like the business. It's got a lot of science behind it. I like that they're selling into South America, because South America is a growing population. It also gives me, as an American investor, a little bit of exposure to South America. I'll want a greater rate of return, but let's take a look. So the last 5 years, wow, look at that ride. Go ahead.
The chart is insane.
Wow, man. So it looks like way back in 2020, the stock went from $5 up to $15. So it tripled, and then it settled back down. So over the 1 year, it's down 48%. Okay, let's see if that's fair, or if the market's just, crazy. It's a strong buy according to analysts. It's discounted by 126%. Woohoo! I like the discount. All right, so growth. So the growth, when they were smaller, you could see that it was easier, so to speak, because at 328, they grew 59%, 27, 10, and then it's slowing down. But that makes sense because it's bigger numbers. But their trailing 12 months is kind of slowing down. So you have this negative. So what's going on here? I don't like seeing
I have read
up and
about
down.
that. Because they are their major source of income is from Argentina. This year we had a slow crop season because of climate, and we didn't have so much rain this year. Mm-hmm. So the earnings didn't come as well as previous years, but it was a weather thing this year.
Okay. So looking at their gross margin, almost 40%, that's good. So they're losing money in the trailing 12 months. So they have gross profit. Okay, so they are profitable. Okay, good. So they finished their fiscal year June 30th. So free cash flow. So they don't have a solid track record of free cash flow, but it's like 32 million. Let's take a look at, see if I can get a better financial statement from their website. Trying to get to their most recent quarterly, and it looks like they announced on November 11th. So revenue did come down a bit. Crop protection came down. Okay. Bear with me. I'm trying to get to their financials and then kind of assess what their financials look like. So this is the quarter, their quarter that closed September 30th, 2024. So the revenue did come down a bit. So cash of $32 million. Okay. They have 46 million in long-term debt. Plus 121. So 157, 158 million. I don't think that's going to be a problem. We'll check it in a bit. And they're not providing a statement of free cash flows. Okay. So this one's a really good idea, but it needs a lot of investigation. You know, first you got to form, I think, a comfort level of, okay, their business is good. You know, do they have patents that are just better than everybody else in Argentina and South America? Are farmers like, hey, I really want their product because their product's better? So I can't tell you that, but I think you could do homework and kind of assess, is this like the better company? For example, Microsoft as a software company, that's the best software company in the US. So if you compare another software company to Microsoft, Microsoft's always the best. Is BioX the best company in their micro industry? And what they're doing is they're creating, they're putting the science into the growing of crops by creating better seeds, probably better nutrition, better fertilizers. And if they do it better, and you're able to say these guys are one of the better performers, then this might be a really interesting investment, because you can invest in this company, potentially it's worth 10 times more money over the next 5-10 years. But that is going to take a little bit of homework. The fundamentals look okay. You also have to form what I would say is your expectation. Do you think they're going to be, like, if we go 5 years into the future, are they going to be a $600 million revenue company or $1 billion revenue company? You know, how are they going to grow? So how are they going to have that growth plan, and is it achievable? the good news about this industry is that food isn't going to go anywhere. It's not like people are going to say, oh yeah, we don't want to eat food anymore. No, food is required. But I think competition, you got to study their competition, see if these guys are going to disrupt their competitors, replace their competitors, or vice versa. Are their competitors stronger in replacing them? Which would be hey, I want to stay away from these guys. So that would be, I think it's a good idea. I like the type of company. They're possibly presenting a really good opportunity. They're down 48% for the past year. But at one point in time, the market really liked them. So there was something special about them. And then for a while, it didn't do anything. For like 3 years, the stock kind of didn't do anything. And then just more recently came down. So I think there's some information here. There's some information that explains why they're selling off so much. You'd have to answer the question of, is the market right? These guys are being replaced by their competitors. Or, hey, the market has them wrong. It's more of there's a climate change issue going on, but these guys are one of the best in their space, or maybe the best one for particular markets. If it's the latter, which is, hey, we're just having temporary problems, but these guys strategically have a very good path forward, that might be a good investment. So do some homework and then bring it back. Let's work on this together. If you want to do some more homework, and then we'll talk about it. I'd love to talk to you about this one.
Yeah, of course, Victor. It was an intriguing company to me because it's Argentinian, and it's one of the few Argentinian companies that is not going off the roof. So I will continue investigating it.
This is where you want to play, Tomas. If you can find 4 or 5 companies that do really well over the next 10 years, you're going to do great. And so this is a good place for you to look and research and analyze and get to a good understanding on a company like this, because this is a good idea, but we just want to see if it's a good investment.
Yeah, and one more fact. Argentinian GDP, 20% it comes from agricultural exports, and here everyone use bioseries. So
let's keep talking about it. I'm interested in learning more, and I think there might be something here. Because a lot of companies see this kind of chart, because especially little companies like this, and then the companies in Argentina. There's a lot of factors that scare people away, but look at this forward PE. If they hit a forward PE of 15, start to grow, this stock's going to double very fast. So you just want to make sure you see everything as clearly as you can, form an expectation, and then make a decision. So good one.
Yeah,
Scott,
please keep us updated, because it's interesting. I mean, while you were talking, I was looking at the Argentina ETF, AGRT, I believe, and it's a wonderful chart, like the opposite of this guy. So it's not only that this one went down, it's went down by the Argentina stock market like double and double and double over the last 5 years.
Yeah, I believe that big hedge funds are going to look into this company, because in Argentina there are coming more and more big fund managers because of the new president and the austerity. How do you say, the austerity regulations, and the cuts. And I believe they are going to look at this one because it is directly linked with the biggest source of income for Argentina.
Very interesting. All right. Very, very interesting company. Thanks for bringing it up. Let's keep talking about it. That one is a fascinating one. All right. Let's move over to some power generation and PCG. So Pacific Gas and Electric. These guys, I know them in California because here they are, California. Now, some years back, they had big problems because, and this doesn't show it all that well, here in California, at times, we get really nasty fires. And it so happened that on one occasion, there was some really bad fires, and it was found that some Pacific Gas and Electric power lines had been toppled over by strong winds or something. And then those power lines started the fire. So these guys were held responsible for it. And this is what happened to the stock price. It jumped off kind of came off a cliff. Now, I don't think, I mean, how are you going to hold a company responsible for strong winds that caused a fire? But they did. Oh, well. But now look at the stock. It's doing quite well, up 200%, because I think everybody remembers that really nasty story. And people forget that, hey, it wasn't like somebody at Pacific Gas and Electric decided, hey, let's start a fire that's going to cause a major wildfire in California and cause a lot of damage. No, it was like Mother Nature acted and Shazam, big wildfire. So, Scott, go for it.
Thanks. Well, I will just mention, I can answer that, being from Northern California and being a former customer of PG&E. So it's not that people blame them for the fire. It's that, well, so for example, I have family from Paradise. Have you heard of Paradise?
Yeah.
The town that burned?
There's a Netflix
So I think it was the
documentary
camp
on Paradise.
fire.
Yeah.
Well, so the issue is not so much the fires themselves, right? Although that does seem to be increasing. It's that there were some hooks, I think, and some other things that they could have done to help prevent the wildfires. And, I don't live there anymore. You can make your own judgments, but also, I mean, moving lines underground would also have helped. Of course, that's much more expensive, but I think the point was that they weren't taking as many steps, preventative steps, right? And you can understand why. It's a profit-making corporation, but I can say for me personally, you do you. Having experienced PG&E service and let's say, scandals firsthand, personally, I wouldn't invest in them. But like I said, you do you.
I really appreciate that you shared that, because that is exactly why I think some people just don't want to invest in this company, because what you just shared. Some people were just like, you know what, these guys, they really caused a lot of harm. There's a lot of people lost their homes, their whole lives were just completely disrupted. So I get that. And I think that's why the stock went from, $70 a share down to $10 a share, because they had to, I think they went into bankruptcy and so forth. But let's move beyond that and see, okay, we know that they have a troubled past, but what are they going to do going forward? They're a $45 billion market cap company. Now, we know that AI is pulling a lot of power. Holy smokes. You look at how much power has to be consumed for AI. It's pretty incredible. And just a quick example, I was looking at a small cap BTBT that I've talked about before, and they do accelerated computing, high performance computing for AI to build the large language models. And if you look at their revenue, half of the revenue gets spent on electricity. So it's like, holy smokes. So as those guys grow, they're just pulling so much power. And that's going to be more demand on Pacific Gas and Electric. And when they sell to these AI companies, they don't have to sell like to a citizen like myself. When they sell to me, they're under certain regulation. They can't do certain things to raise my rates, as an example. But to commercial businesses, it's a free market. They could charge far more for commercial accounts. So you keep that in mind. That could be an opportunity for PG&E. So they're a $45 billion company. They don't pay a dividend. I think they're still trying to get themselves really, really well capitalized after having that bankruptcy happen. The revenue is a $24.8 billion revenue company. They're probably exploding because of the whole AI thing, right? Well, they're actually only up 20%. So the 5-year looks so good because they were kind of left for dead, and they have shown to be, hey, we're going to be around. So 20% up, that's very good return. Usually what falls apart for me on the utility companies is their CapEx is just so darn high. Let's take a look at what PG&E has. So their operating cash flow is $6.5 billion. CapEx is $10.1 billion. So this is what I've never been able to get my head around. How do you continue to operate when every year you have to put so much darn capital back into your business, right? So I think it was Brad that brought this one up. Are you an investor in any other utilities? Have you invested in utilities?
I have not. I've been looking, but it's a common theme, it seems, is free cash flow for most utilities is always negative. Is that normal?
Yeah, that's what's weird is you see the CapEx number, right? That's like
Yeah.
basically you have the power plant, and every year you have to put parts into it as you should. You have to hire qualified people to do the work, and you end up spending more than your operating cash flow. This is a very common theme. That's why I don't invest in utilities. Now, contributions to nuclear decommissioning. Yeah, this is so I don't invest in utilities, and this is the reason for it. Is I just don't believe in this. I'm like, I don't want to buy this. Like, this is a recovery stock, right? We talked about the big problem they had years back, which is probably the reason why the stock's appreciating nicely. But let's take a look at a competing product, and I'm going to go to Duke Energy, which is a well-known company. These guys, over 5 years, you would have done 32%, and that's including a really nice bump in 2024. So this isn't a great return. I mean, it's pretty decent if you add the dividend. And this is with AI supposedly really creating a lot more demand for them. The reason why I didn't invest in like Duke or any other company is let's leave 2024 out of the picture because that's been kind of really influenced by AI. You would have been like sitting on zero gains over 4 years, and you would have made the dividend. Well, that's not good enough. There's just too much risk. For example, PG&E. You know, something like this could happen. And what happens to our stock price? It just gets hammered because it's a stock, it's a company. They're generating power. What are the power plants like in the case of PG&E? In their case, a wildfire was caused. Maybe Duke or whoever else causes another or is involved in a natural disaster related problem, and they just really get taken out by the woodshed and get hammered. So that's why I don't like utilities, but that's just one investor. Some people like them. Some people really love them nowadays. Some of these stocks, like I think it's Vistra, so this is a retail electricity, and these guys are kind of independent. So they're not like regulated. They kind of sell power to markets that need it. And you look at their stock, it's doing quite nicely. And that's because AI is supposed to just drive so much value to them. I don't believe in this, but you know, who cares what I think? Investors have done really well with this. When you look at their financials, you look at operating cash flow, 4 billion, CapEx, much better situation. You know, they're only spending 1.8 billion in CapEx compared to the $4 billion number. But even with that, let's say they net free cash flow for these guys are 2 billion. Right now, their market cap is 55 billion. So it's like, man, how do we get to 55 billion? That's like 25 times. No, that's more like 27 times free cash flow for a utility. It just doesn't make sense to me. But these have been doing really well because of AI. PG&E, we just went over cash flow. Let's look at what analysts think. 11 analysts cover the stock. They think it's discounted by about 6%. The prospects for their business, it's going to grow modestly the next couple of years. Earnings per share is going to expand nicely. I mean, it's pretty stable. If they hit their forecast, it's a pretty stable company. So that's why analysts are saying, hey, it's a little bit discounted, but they're not paying a dividend. So I would not be an investor. I think the gains have been kind of priced into the stock already. But I could be wrong, like I've been wrong on Vistra, but that's what I'm seeing. What do you think, Brad?
Yeah, I mean, I was kind of thinking the same thing. I'm glad that Scott mentioned what happened because I knew it was a turnaround story, but I didn't know what happened, why it dropped so much. And now it makes sense.
Yeah, that occasion in California, I forgot how many homes were consumed, but Paradise is a beautiful place, wooded area. It's in Northern California, Northeast California. And people were kind of living in paradise, paradise being like a really nice place to live. And then this firestorm hit and it consumed all their homes, and it was really, really tragic. So, yeah, that's PG&E. Just not a place where I think it doesn't make sense to me, so I don't invest in it, and I move on. I'd rather go find something that makes sense to me.
And just to add, I was just thinking about it, and I remembered exactly what happened in that particular case. I think they were found liable for actually causing that fire, or causing a great part of it. So yeah, it's one thing if there's a natural disaster, right, that could be exacerbated or whatever. But I think in this case, in that particular case with Paradise, they were actually found liable for causing the fire in the first place because of faulty equipment that could
Yeah,
have
they
been that they knew was faulty.
yeah, I
But
think
yeah, that's just what I understand.
what they found was, I think part of it was that they had enough information to realize that they should have de-energized or unenergized the grid in that section, and then the power lines would have not like caused the fires,
Yeah,
but they didn't.
yeah.
And it was
And
kind
to
of
their
like
no, go ahead.
to their there was negligence on their part, and the fire happened, and it's like, oh man, that was really bad, and the company got held responsible for it.
Yeah, and to their credit, so I have the house in towards the coast in the La Honda area, and so that is also PG&E, and they are doing rolling blackouts there in the wildfire season, which sucks, right? If you're living there and you rely on electricity and you don't have a backup, but it's better than a wildfire, right?
Yep. All right. So my typing was wrong. I looked at Chegg instead of Chubb, and I was like, whoa, what's wrong with that chart? All right. So I think Scott, you asked about Chubb. So let's talk a little Chubb here. So Chubb's been a winner for 5 years. Look at that, 90% return. You're getting paid a dividend. So mission accomplished. What a beautiful chart. Look at that chart. And our friend, Warren Buffett, kind of put his stamp of approval on this stock. He's an investor. So it's been doing really, really well. For the past year, it's up 26%. So getting the job done. Really nice stock. Analysts think it's fairly priced. I'm probably going to end up being in the camp of it's probably discounted by some extent, because the insurance companies, they had a rough 2023. They got things actually 2022, and they started getting things sorted out in 2023 and just started performing. And for the last year and a half, 2 years, just really good performance out of insurance companies. And part of it is the insurance space. You think about, COVID hits, and okay, that really changed things. And cars, as an example, the price of a car, used cars, just went really high in 2021, 2022. And when an insurance company was accustomed to, oh, you have a Toyota Camry and you got in a bad accident. Okay, we're going to go ahead and total the car and give you an $8,000 check. Here you go. Okay. But very quickly, car prices went up so high that instead of giving the policyholder an $8,000 check, they were giving them a $12,000 check, $14,000 check. And that really adds up fast. Or they go try to fix the car, and the parts have gone really expensive because there were supply chain issues. So a repair job that maybe was a $2,000 repair job out of a collision now is $5,000, or maybe 5,000 went to 8,000. So all that was like squeezing the insurance companies. Now, same thing with properties, right? When you have properties going up in value and the cost of materials for properties, that squeezed the insurance companies. So they were able to get rates where they should be. Insurance rates have gone up substantially. I own my home, our insurance went up. I own investment properties, insurance has doubled. Holy smokes. Our car insurance doubled. Everything's doubled. Well, as a consumer, I'm like, well, I don't like it, but I get it. Stuff, items, assets cost a lot more. The materials to make houses cost a lot more. The materials to repair cars cost a lot more. So insurance companies have adjusted and their revenue has gone up, and they've maintained their profitability in 2023, 2024. That's kind of generally what I've observed. I've been an Allstate stockholder for some time. The best investment over the last 2 years was Progressive. So I did okay on Allstate. I'm happy with the return, but I looked at Progressive 2 years ago and I said, I'm not going to buy Progressive. I'm going to buy Allstate. Progressive was the best return on investment for the last 2 years. Let's see where Chubb stacks up. So this is a $115 billion market cap company. Revenue is $54 billion. So you're paying 2 times revenue. Look at this PE. Isn't that a beautiful PE? 11. That's incredible that you can find a company with an 11 PE with a good brand name. Analysts, and I'm sure there are lots of them that cover the stock, are saying, hey, it's fairly priced, small dividend, but hey, if they are appreciating at 26% per year, you don't have to pay me a dividend. I'm good. I'm good. Just keep doing this and I'm good. All right. So revenue, you see this revenue here. Revenue growth looks great. Beautiful. Let's look at profitability.
Victor, quick question and note. Just let's make sure, is this reported in USD or CHF? It's probably USD.
USD.
Okay.
US dollars. So remember that kind of general observation that I was telling you about the market. You see how we went profitability, net income? See how it's negative here. This is where they got squeezed. That's a pretty good drop in profit, but then they've come back to become profitable. So, all right. So we're there. Free cash flow, 14.8 billion. Beautiful. And PE looks great. Market cap. I mean, this company is worth 150 billion to 200 billion. I can tell you that, unless their balance sheet's terrible, but I don't think that's the case. So this is a good discounted stock. And if we look at their balance sheet, and their balance sheet total debt's 22 billion, EBITDA is 11 billion, so they can pay off debt in 2 years. Beautiful balance sheet. So this is a good stock. Very good stock. Insurance has been a good place. This has been doing well. Over the last 5 years, it's been doing great. If we look at our friends at Progressive, you look at their return, it's been exceptional, 280%. This is the NVIDIA of the insurance industry. Over the last year, 64%. So they got squeezed, but they came back. See, this is where the squeeze happened. And if you look at Allstate, and I'm going to get to your, and Kiter, go for it.
No, I dropped a message if you can look at.
Okay, we'll do. So Allstate, which is a stock that I've owned, I'm happy with Allstate, but again, I'm just kind of, calling the balls and the strikes and saying, hey, the best play was Progressive, but I'm not going to complain too loudly about it. It's been a good stock. So Allstate's really worked. When you look at insurance companies, they're doing well. Are things going to change? I don't think so. I think insurance is a pretty good space. It's a pretty good space to be. I think if you invested in any of these three companies, Allstate, Progressive, or Chubb, I think you'd be okay. Progressive, I'd have to look at their valuation. See, even analysts are saying it's overpriced a little bit. On Allstate, analysts are saying this one's discounted a little bit, and then Chubb is discounted. Chubb looks good. All three look good, but I'm not going to own three insurance companies. I'm just going to own one, and I own Allstate. What do you think, Scott?
Well, that's interesting you bring up the PE ratio because they all look fairly low. I mean, Chubb might be the lowest, but they're all pretty good. And the dividend, yeah, I guess I wouldn't have to lose that whatever it is, I think 15% withholding if you're in the US. But the dividend's not that big anyway, so the growth would be the. But yeah, for me personally, so I was a stockholder of Lowe's, which they're mostly insurance. They have other companies too, right? But CNA Financial, which is insurance, is like their main profit-making enterprise. And so I just sold out of that. And even if I do buy back in, it's going to be small. So yeah, looking at other insurance options. So
yeah, again, I think there's more gains to be made in insurance. I'm not selling my Allstate stock. I was actually buying shares because, you think about, what's going to change that's going to hurt insurance companies. I don't see any big factors that are going to hurt insurance companies. For now, I'm like, hey, I'm just going to be happy with my return on Allstate and maybe add some shares here or there and keep doing well with it.
Yeah, and one other thing to mention. So I don't know in detail where their operations are exactly. Like I assume since they're reporting USD and on NYSE, I assume they have major operations in the US, but I assume it's not exclusively in the US, right? I assume there's operations in Switzerland too. And so I would just keep in mind, part of what you might not be seeing here, right? It might be behind the scenes. The Swiss franc is a very strong currency. So even though like the US dollar is getting much stronger against the euro, it's not really getting stronger against the franc. The franc is still, last I checked, 11, 12% stronger.
Hmm.
So, and it was more for a bit. So that might be part of the rise you're seeing here.
Okay. Yeah, thanks for pointing that out. So insurance, we'll finish off with insurance. We covered all the stocks that you guys listed. Those were good ones. We kind of crossed multiple industries. It's smart to do that. That way we kind of pick and choose what industry is really good to look at now. What would be interesting, and maybe for this coming Saturday's workshop, let's talk about exit strategy again. Let's talk about when to sell again. Next Saturday will be the very last day of November. It'll be November 30th. And it might be a good time to think about, either getting out of a position if you're harvesting losses, if you have a stock that's losing value, or maybe starting to organize, at what point do I sell? And it's not a bad decision to make because, some industries are going to be stressed. I think the expected tariffs are gonna hurt some industries. I don't know how. I don't know which ones just yet. But I think if you have a business that's a big importer, like we looked at that water heater business, and I think conceptually it's a good idea. It's a good quality company. But let's say they're a company that imports everything from China. Everything gets made in China. Man, how are these tariffs going to hurt that company? Is their cost going to go up like 20%, 40%? And it's hard to pass that on to their customer if their competitor maybe isn't having to pay that tariff. So I think that'd be a good subject to bring up. We could bring up BIOX, which is the stock over in Argentina. It'd be fun to kind of follow that one and try to get to really good actionable information and tells us, hey, that's a pretty neat little company that is worth, betting a few dollars on. Or our conclusion might be, that's too many problems. Got a lot of choices out there. Let me just pass and just watch the stock. It doesn't cost me anything to watch it. But for now, maybe we don't invest. But it'd be fun to just track that one. So let's keep talking about BIOX, as well as any other stock you guys want to come up with. Okay. Go for it, Tomas.
Last comment on BIOX. Monsanto owns 5% of the company.
Yeah, expected. But Monsanto is like the big powerhouse over here in the United States. And they actually create, what's the right term? They genetically modify seeds, and then those seeds are sold to farmers. And then the farmer pays Monsanto, a premium for those seeds, but the seeds are made so that they can weather drought. They can, fight off certain pests and stuff. So I think it's a good thing. Some farmers would say Monsanto charges too much money, but it's not my area of expertise. I'm just kind of reporting what I hear. All right, guys. So it's great to be online with you guys again. And let's see how the market goes, man, this week. Let's hopefully market keeps going up and we keep making really good returns on our stock. Speaking for myself, I'm having a great year, great appreciation. Cryptos really work. Crypto is the number one asset class for me right now. Bonds have been kind of doing what they should be doing. And I feel like I'm in a really good space. It gets harder to find really good value stocks, but hey, I'm young. I got based on Warren Buffett's timeline, I got another 40 years to invest. So I'm not in a hurry. I'll just be patient with my cash. I got a good cash position, and we'll continue to try to find good investments. Specifically, I want to see, which stocks I want to lighten up on. I think I talked about Chevron being one stock that I'm going to lighten up on at the beginning of the year. Maybe pull $25,000 out of Chevron and have that capital ready. I might go into a smaller energy company, but I think small caps look interesting right now. And it was fun to talk about those stocks with you guys. You guys have an awesome weekend. Have a great week. And I'm sure I'll be communicating with you on Discord or email or some way between now and next weekend. Thanks, guys.
Take care.
Thank
Bye.
you, Victor.
All right. See you guys.
Bye-bye.
Take care, guys.